on this March 11th, in a couple of weeks, it'll be 77 years since I bought my first stock. And I paid $114.75 for 3 shares of City Service Preferred. But if you had if you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America. I go back and I point out that there were 2 77-year periods before that, and that takes us back to George Washington getting inaugurated. And there wasn't anything here then. And now you have $108 trillion of household wealth in the United States. You know, we've got something that works. And that framework wasn't that we were working harder, it wasn't that we were smarter, but we had a framework that unleashed human potential. And just think of that, 3 77-year periods, one of which I experienced. And you couldn't help, but all you had to do was believe in America.
That worked the last 77 years, but there's a question that came in, T29. This is from Scott Baker. With so many people in the S&P index funds, is it still market neutral and the best investment vehicle for most people?
Yeah, I think it's the best investment because most people don't know how to pick stocks, and most of the time I don't know how to pick stocks. I mean, it's not an easy game, and by definition, people are going to do average. I mean, take everybody in aggregate, and if half of them are paying big fees and jumping around and paying brokerage commissions, the other half have to do better. I never know what markets are going to do. There's never been a time in my life when I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I never felt that I knew it, and I never felt it was important. I will say that in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
You know, I know you look at things like that, but I also know that you look at stocks and try to decide if they're fairly valued, if they're overvalued, if they're looking cheap at this point. And we have been waiting for a correction for an awfully long time. That's finally come. Do stocks look cheaper to you, just based on where we've come?
Well, anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. But you know, stocks are going to go down. You could probably look it up as to what percent of the days, since I was born, they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting 3 times as much in dividends as the whole average was selling for at the start. And you had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
Yeah, unfortunately, that's the biggest problem, is trying to fight yourself in some of these situations.
Yeah.
Have you been buying more stocks lately just because prices have come down? Have you upped your percentages and other things?
We're almost always a buyer of stocks. So we have bought more stocks since the end of the year. But we earned 17 and a fraction billion last year, and we had our float go up $4 billion, which is additional money available. And so we're almost always a buyer of stocks, and we're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down, but it's hard to think of very many months when we haven't been a net buyer of stocks.